Hey guys, so today I'm filming from London. I'm at a hotel celebrating my mum's birthday, and I thought, you know what, make myself a coffee and sit out here and make this video on things I wish I knew before taking out a mortgage. So this is a mini series here on the Humble Penny. If you've not seen all the others, we've made so many other videos on this particular series. Things such as things I wish I knew about my career, things I wish I knew about investing, making money, buying a house. I'm going to link to all those various videos below for you guys to check out. All right, let's jump straight in. So the very first thing I wish I knew is that you can overpay at intervals. Now, what do I mean by this? So we obviously know that when you take out a mortgage in the UK anyway, for most products, there's a 10% overpayment limit, so you can overpay. For example, if you've got 250k mortgage, you can overpay in a year by 25,000, which is 10% of 250. But what a lot of people don't know is that usually if you wanted to pay more than 10%, if you were very fortunate and in that position, you can actually wait and overpay at the interval between when your current mortgage deal ends and when you get the next mortgage deal. You can then, pay in that interval before you remortgage, and then as soon as you remortgage your product, you then get another 10% that you can then overpay by. And it's something we did, and it's the reason why we were able to pay off our mortgage in 7 years instead of 10 years or 20 years or however long. In addition, the 10% also resets every calendar year, so it usually resets in January, and then you get that 10% for the year. So you have that interval to take into consideration as well. So you've got the period when your deal ends, the 10% when you start a new mortgage deal, then you've also got the calendar year as an interval to take into consideration. The second thing I wish I knew is that you can get a consent to let with your mortgage company. So let's say you bought a place. You bought a place with your partner or by yourself, for example, and life's good. But suddenly you're like, you know what? We want to actually try and buy another place and move into maybe a bigger accommodation, a bigger property, for example. You can get what's known as a consent to let from your mortgage company, so that you can then have the right to let the previous property you've got without necessarily having to sell it in order to move to the other place. And also, you're not having to get a buy-to-let mortgage necessarily in order to make that move. So that consent to let still remains for your residential mortgage. So you're still, on your residential mortgage, where you have the right to let that property out and then move to your next property. So doing that is fantastic, because then you're able to, receive rental income, and that consent to let gets reviewed, maybe every 3 years to every 5 years, depending on which lender you took out your mortgage with. All right, so the third thing I wish I knew was that you can get mortgages without a 10% mortgage cap. Listen, right, this is absolutely fantastic. Again, this speaks to people who are trying to potentially pay off more on their mortgage a lot sooner rather than later. There's a core assumption that everyone gets a mortgage product and it has a 10% cap on it. The answer is no. You can get mortgage products that have absolutely no cap whatsoever. You might have a windfall come into your life, and you might think, well, actually, I want to use that windfall and overpay my mortgage a lot sooner rather than later. All right, that leads me neatly into the fourth thing I wish I knew about taking out a mortgage, which is that using a broker does actually matter. Linked to the previous point I mentioned earlier about, the lack of a 10% cap. If you go and look online, say you went on like these comparison websites and try and find a mortgage deal that way, it's actually a lot harder. You might not even be able to find those mortgage deals that don't have the 10% cap on them, because you might not even know they exist, so you wouldn't even know to search for them. I've personally found that using a mortgage broker is actually a really good thing, particularly if you get the mortgage broker that doesn't charge you a fee, but instead gets paid by the bank if your mortgage application is successful, okay? So not only are you building a relationship with a broker, so they're keeping you really informed on what's happening in the mortgage market, they also don't charge you a fee up front, which is fantastic. So it's really, they're really incentivized to make sure that you become a success and get the right mortgage for you specifically. Thirdly, they get you some really, really good rates that might not be available in the marketplace, because there might be broker-only mortgage deals. And fourthly, they can also help you find a mortgage that does not have a cap on it, like I mentioned earlier. One that allows you to overpay as much as you want, whenever you want, obviously tied to your budget and your personal situation alike. Right, the fifth thing I wish I knew is that some banks are way easier to get a mortgage with than other banks, okay? Depending on whether you're trying to get a residential mortgage or a buy-to-let mortgage and so on. I don't know about you guys, but I've personally found dealing with the likes of Halifax, for example, not a recommendation, but the likes of Halifax, for example, way easier for getting a mortgage than other mortgage companies, which I'm not going to mention. I mentioned Halifax specifically because I've had personal dealings with them in the past. Again, they're not paying me to mention them. I'm just mentioning them because, I've had personal dealings. And everyone in my family that I can think of who wanted to get a mortgage and get on a property ladder has had particularly good results with them in terms of actually getting onto the property ladder, actually getting a mortgage in order to buy a house. So this is one thing I wish someone told me when I was trying to, navigate and get a mortgage and that sort of stuff. I wish someone said to me, actually, do you know what? All these mortgage companies out there they're not all alike. You have some of them that are a lot easier to deal with in that for example, I'll give you an example. Let's say, for example, that you are somebody who's trying to buy a property, but you've got maybe, another property with somebody else. Some mortgage lenders are happy to actually lend to you and wouldn't really factor in the fact that you've got debt with another provided that property that you've got access to or you've got a bit of is covering its own back in that it's getting rental income and so on. They wouldn't try and reduce the amount that you can borrow as a result of having that other liability in a way tied to your name. Whereas some other banks will actually say, well, actually, no, I don't care whether you're getting rental income for that property. I factor that all into the picture. And as a result of doing that, I can only lend you this much, right? So knowing that some banks are way easier to get a mortgage with than other banks is definitely something that gives you much more chance of success when it comes to taking out a mortgage to buy the property that you want for your personal circumstances. All right, so the next point is about the flexibility when it comes to changing the number of years you have left on your mortgage. When you make an overpayment on your mortgage, some banks are okay with you just calling them up and saying, do you know what? I want my overpayments to be applied to the capital element of my debt, right? And some of them are even very flexible in you saying, well, actually, I also want the overpayment I'm making, I actually want it to make this a recurring thing and therefore reduce the number of years I have on my mortgage. Let's say, for example, you've got a 25-year mortgage and you say, I want to reduce the number of years to say, 20 years or 15 years, and therefore I want to pay a fixed higher amount on a monthly basis going forward. Some other mortgage companies are actually pretty fussy about this. They give you such a hard time. It's almost as though they're trying to not allow you to become mortgage free eventually. They actually really go to great lengths actually stopping you reducing the number of years you have on your mortgage, because obviously for a mortgage company, lending money to you as a customer is their business. They're in the business of earning interest, and the more interest they earn, the more they keep you in the bondage of debt, the more they obviously earn from an interest perspective. Call the bank you want to get a mortgage with and actually ask the question. Just say to them, if I decide to make overpayments, can I easily have those overpayments go against the capital element of my debt? And in addition to that, am I also able to reduce the number of years I have? If I called you up and say, well, actually, I want to pay off a lot earlier, am I able to do that without it being a problem? You assume in your mind that, this is something that should be a no-brainer, and every bank that you get a mortgage with would be very flexible in letting you do that, but that's not the case with a lot of mortgage providers. Now, to wrap this up, the final point I wish I knew is that the amount of money you actually borrow for your mortgage absolutely matters. Now, I say this because, when we're buying houses, there's an emotional element to buying a property. Particularly if you're buying a property for residential purposes, you just want to buy that property, you just want to get onto that property ladder, and it's very easy. And I think this has been made a lot easier in the digital world, where a lot of our expenditure is very digital. We can pay with our phones, we can pay with our watches. It's very easy for us not to really understand the gravity and the seriousness of how much money we are borrowing. The amount you're borrowing really matters. And an extra 10k matters, an extra 20, 50k matters when it comes to borrowing, because it really matters so much for how much longer you have to work to pay off that debt. So I make that final point to say, if you are in that position right now, where number one, you are trying to buy your first property, please think very carefully about, one, the property price you're buying in terms of the value of the property and the implied level of debt you're taking on. So very important, you really think about that and understand how much you're borrowing and what that means for your future. And secondly, for the person who's remortgaging, and you get asked that question, do you want to take on more debt on your property? Do you want to take any money out? A lot of people take money out to do up their kitchen, to buy a car, and to do all kinds of things. It sounds really weird, but some people don't actually understand that when they remortgage, take out some money, that actually means that they're taking on more debt. Not many people really understand that. Okay, so really think about that. And if you're doing it for investment purposes, then great. You've got a business case for it. But if you're doing it for the purposes of something that isn't really yielding value and adding value to your life, then really understand that it means that you have many more years in the future to work in order to be able to repay that money and become debt free if it's something that you hope to achieve one day in your life. Guys, I really hope you enjoyed this video today on the things I wish I knew before taking out a mortgage. I just hope that the noise wasn't so much here because I'm doing this outside, obviously. And like I said before, if you've not seen the previous videos in this series, I point to you below to go head over and check them out. If you've enjoyed today's video, really appreciate it if you hit the like button, because that just helps to get this video hopefully promoted to many more people to hear these tips as well on their journey of taking out a mortgage. Guys, thank you so much for watching today's video, and as always, in all things, be thankful and seek joy. Take care. Bye for now.